What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your partners looking old, so fresh, cold, clean, and always we stay expeditiously looking better than you. Yeah, I channeled my internal TI. It's all good, baby. It is what it is, baby. What's going on, man? How you doing, big time?
Hey man, doing good, man. Another week, another good week.
Another week. Yes, sir, man. Number one, doc, did we get the bag?
Bro, we always getting that bag. It's a good week.
Yeah, we got the bag, y'all. Before we talk about the bags, y'all, if you could, no matter what platform that you're on, subscribe to the channel. That helps the algorithm, guys. We get a lot of feedback as far as direct messaging as well. So we're trying to engage, but if you could subscribe, guys, that'd be great. Now let's go back to the bag. Mine are more cash flow bags right now. We got pretty big ones coming with the new construction projects and apartment complex projects, man. So your boy got the bag, cash flow in the bag coming. What's up with your bag, Cliff? Holla at your partner.
Man, I was working on a deal this week. The construction costs were a little bit above what I was looking for, so that deal didn't end up going through. It was a nice little duplex. But you don't look for another one, man. Still got the appraising business that's going good.
Sure.
Got me another business kind of being built up, but man, I was trying to go back to rentals. Got paid again on my rentals this week, so that's good.
For sure.
Man, just keep coming in.
Yes, sir. I got about $15,000 bag coming tomorrow, so it's all good. So we sure that's cash flow. That's for one of the property, one of the assets. It's one. But anyways, guys, man, welcome to the Real Estate Live Training, guys. We're gonna get right into this thing. We're gonna get in, get out, and get paid, guys. Today, guys, we're gonna talk about how. First and foremost, before we go to the topic, we got to begin right where we begin every single week. Cliff, boots on the ground, Doc, from an investor standpoint and the appraiser standpoint. What's been going on with the market, Doc? How at your partner?
Yeah, the market is still going sideways. So, a lot of areas prices are dropping. They probably gonna keep dropping for a minute. But I'm hoping, and what I'm seeing is we're getting to the bottom. We're getting to the bottom. The Fed is gonna probably raise rates a little bit more than they're gonna stop. So I think right now, this is about the bottom. The next month, I think once we get into next year, it's getting to spring, probably in the March or so, April. That'll be the end of the bottom. It'll probably start creeping up a little bit from there. So if you're gonna buy, I'm telling you, the next 6 months is gonna be the best time.
For sure. Now, this is where me and Cliff may disagree on the bottom. The reason why is because I think Cliff, if I'm wrong, Cliff, let me know. And guys, this is a healthy discussion concerning what's going on. I think Cliff is saying that things are kind of slowed up a lot in the market because, again, he's a licensed appraiser as well. So he gets the behind the scenes details on refinances and the sales. And he's actually in a very, as the nation would say, a hot market, but it's cooled down a lot here in Texas as well. So what he's saying is it's come down to a screeching halt. In other words, refinances have stopped. 90% of refinances have stopped. 90%. Home sales are probably down to maybe about 20% being sold because people are not selling because it didn't make sense for people to borrow the money. Unless you structure the deal the right way, and there's a buy down when it comes to interest rate. So the cost of capital is too great, or the deal is just so sweet, they move forward. But those deals that are so sweet, people are not finding a lot of those deals from a retail standpoint. And so, and that's a logical conclusion. What I would say is on the other side, for me, I'm factoring in the excess printing that's coming in 2023 because the Inflation Production Act, not Reduction, Production Act, what that has done is that $5 to $6 trillion that has been originated, again, the federal government trying to manufacture cash flow, which is a terrible thing. That's what actually causes inflation. That $5 to $6 trillion won't hit the market until 2023. My question would be, where's the money going to flow to? So if the Fed stops raising the rate, let's say Q2 of next year, that excess cash coming in that has been printed, how they're going to burn that cash out of the system without raising the rates. Now, I'm open to any type of reasoning if it's additional solutions, but I don't kind of see how the prescription of not raising the rates next year is not going to be the same thing that they're doing now. Does that make sense? Cliff, what do you think, man? Am I off base? Talk to me.
Well, I think they still gonna raise rates. Like I think this next meeting they're gonna do 50 basis points, and then going to next year, they're probably gonna raise it a quarter of a basis point, maybe 50%.
Okay.
But what I think is gonna happen is they have to stop and at least measure what they've done, because what they've done in the last 6 months of raising interest rates is the fastest rate increase ever. Ever. We've never done this in American history, European history. No one's ever done this before. So at some point, they got to stop and see what they've done, because they just ruined some markets. They sent the stock market down, real estate market down. At some point, they got to kind of say, hey, let's see what we've done and measure it and see where we're going to be at, because it's hard to measure while you're raising.
I can understand that and agree with that. I guess my difference of opinion would be in the last 36 months, 40% of the U.S. currency have been printed, in its history has been printed in the last 36 plus months. That's ridiculous. That lets me know why they are raising the rates. It's because they printed so much money. They have to get the excess cash, burn it out. And so if the printing had stopped as of, let's say, this fiscal year, I would agree with that from a fiscal standpoint. And I hope I'm wrong. What I'm saying with the new printing that they're going to be printing, guys, the only solution to that's even feasible, that makes sense, is for them to raise the rates to burn out that new excess cash. That's what I'm saying. I may be wrong. I hope I'm wrong. That's why I'm saying 13 to 16% interest rates for retail. I hope I'm wrong. I hope I'm wrong.
That market, man, I don't know what would happen to the market. We start getting to them levels. That to me, that would be catastrophic. If they have to raise rates to that level, I'm not sure how the market can function. You're gonna have bankruptcies. You're gonna have a lot of issues that we're gonna have to go through. If the I guess the difference too would be with that excess cash, how it's being spent. If it's being spent slow in the market, it may not have as big an effect. It's going to have an effect. Inflation is going to happen regardless. The question is how quickly you spending that money, right? So we're looking at the rate of spending the money.
I can see that.
We got to take a look at that and see how it's being distributed into the marketplace. Because you are right. They still got a couple. I think maybe a trillion, if not more. They still got to spend. You know what I mean? So. But what I'm hoping is that the interest rates that we're currently at is high enough that even with the new spending they're going to go to, it's still going to be high enough to cause people to not spend the money. To slow it. Because right now we're seeing the interest rates, it's already slowed. It's already dead right now, right? Yeah. So what if they kept it where it is? It would still stifle spending in the future.
Yeah, I can agree with that. But whenever the market is not spending money, number one, that detonation, and number two, capital is not being invested, Money is created when you borrow it. That's when money is created, is when you actually borrow the cash.
Right.
Where the people stop spending the money and or borrowing the money, you have a stagnant economy. And what's going to happen is the government then steps in via these little stupid bills and begins to try to manufacture the cash flow by infusing more cash with the hopes of that drawing the investors and the buyers off the sidelines. And what I'm saying is by doing that, that's going to infuse more liquidity into the system. I call it fake. It's fake money into the system. And then what's going to happen is they have to burn off that new excess cash. Now, I do agree with you when it comes to the rate of the spending. But from what I can see with unfortunately our political vote getters, they spend like drunken sailors.
Oh yeah.
So that's that's why I'm saying these guys are going to spend the money because they have to. Because you better believe a lot of them are getting some kickbacks. Let's just keep it one though.
Oh yeah. Some form. You know what I mean?
Yeah, let's just
we
stop
we
playing.
already see that. We already
Yeah,
got evidence for that. I mean, it's possible. We had, but if you, from my perspective, you look at the rates that we're starting to see in, it's definitely
Mhm.
slowing. But
Yeah,
it, like you said, it really does depend on how much more money they spend. If they keep
yeah.
spending like they've been spending, it's going to cause the recession to be longer.
It is. It is, and that is my fear. My
Mm,
fear is this is being manipulated for a reason. Because I don't know if you heard, the government has created a beta test for the Fed coin. It's out. Central
yep.
digital currency is out. As far as it's in beta form, so I don't know when they're going to roll it out. But that's what I'm saying is that's a modern monetary theory type of scenario to where well, someone said that I'll give Cliff his dollars, and if Cliff wants to go out and buy steak, they can say, "Nope, Cliff, today we think you should be eating healthier. You can't buy a steak, so your dollars don't work to buy a steak. It may work for you to buy chicken, ground beef, but not steak." That is what I'm kind of seeing of where we're going.
If and when they do that, they're going to do that in the form of taxation. They're not going to say, we believe in freedom. We believe in you having choices. We're just saying if you want that steak, it's going to have 50% tax on it.
Well, now you're talking about the cost of goods now. And that goes right into the modern monetary theory. They believe by putting these, what they call guardrails or pressure points, they can control. They can print as much as they want to or create dollars as much as they want to via the Fed coin. And then know that's going to drive up the cost, but they can control that inflationary cost by saying, okay, we see a spike over in the meat section of the economy. I'm making something up. Let's curtail this area in the United States for not buying this type of meat because we see chicken is inflating right now. Same thing when it comes to oil and gas. The same thing. They believe they can control. If they have a central dollar type of scenario, a Fed coin scenario, a digitized dollar, that can control people what they spend. They can even tax you, as Cliff was saying as well, for having the wrong statement.
Right. Yeah. I can see that. It's the same they do for cigarettes, right? That's why they got this high tax on cigarettes. Same thing on
Yeah.
alcohol. Whatever they
Yeah.
deem to be a negative thing, they want tax to say you shouldn't do it.
Yeah.
So if
Yeah.
they do
Yeah.
affect the problem is going to be the transfer. How
Yeah.
do you transfer the economy and all the
Yeah.
debt over to the coin? Right. So it's going to be a difficult transition in order to
It
do that.
will.
And I don't know if they can force everybody to do that. What they're going to probably do is do it through the banks.
Yes, that's correct. Yes, the beta test is with I think three or four banks: Wells Fargo, Bank of America,
Mm,
and two more. So a little bit, the top tier banks they are in the beta testing on that. And we're telling you this, guys, is because This type of setup is going to affect the real estate market. So you should understand what's going on in the market from the financial standpoint, the stock market standpoint, and which is affecting the real estate standpoint as well. So this is not a political discussion. This is a financial, economic discussion. So you get the entire context. Most investors only focus on one sector, and then when they get the ass handed to them, it's because they forgot the other two. If that makes some sense. So me and Cliff, we always talk about, okay, cost of goods, new construction. Yeah, we could do new construction, but dang, if you look at the cost of lumber, it's going up here. How can we get the cost down? What if we actually buy in bulk? In what area? We have in all of these discussions because the price points, guys, we're having to adjust to as well when it comes to cost of goods. Cliff just said, of course, he had turned down a deal because the cost to construct it of a construction was too much. That was a wide decision. So we're not exempt from the high cost of goods. We just have the wisdom to know how to adjust, negotiate on the fly. That's what we're talking about here. Would you agree, Cliff?
Right. Yeah. I mean, you got to figure out all the parts of it, right? What you can do, what you can't do. And then sometimes it comes down to the design where you can do it, but you got to change your design about what you can do. And you got to be smart about how you can make a standard basic home look like it's luxury. And there's different things you can do that with the design of how you put together the house.
That's correct. That is correct. So, guys, man, that is the update on the current market analysis. We kind of added a little bit of some bonus up in there when it came to financial spending theories, things of that nature. We give you a little bit of a little bonus to how mine works. But let's get down to business. Let's get out of real estate. Okay, this is the question we want to ask, and we have the perfect person on the live that can answer these questions. Rarely, guys, can you actually get in the mind of an appraiser? Would you agree, Clef?
Yeah. We busy. You know what I mean? It's hard to get us to break down all the elements that go into what's going on with the value of a property.
So he's correct. So this is going to be more of a Q&A between he and I. I'll give my little 2 cents as well, but I want to lean back on him because he's a licensed, accredited appraiser and can go into different things. Now he's going to let you know how his appraisal may be different than Joe Blow's appraisal. He's going to let you know why that is actually accurate. So here's the question I want to ask you, Cliff. Before I ask the question, we want to talk about how to determine property values in a changing market. The market is changing on the fly so much. Now, Cliff, whenever there's a changing market, Doc, does that affect your job or your function as a appraiser?
Yeah, it has to. So we have to take the the current trajectory of the market into account when determining the value. Mm-hmm. So what we're going to do is, we're going to look at the comparables and we're going to factor any trends into our appraisal. So basically saying, like, right now, you might have some areas of the market that the housing values are declining.
Yeah.
So what we're going to do is we're going to do an analysis over a year and say, okay, what's the yearly decline, and then factor that into our comparables so that we know, hey, if this property was 6 months ago, well, we got to use that 6 month decline to today's point to reduce that price in our comps in order to get the true value of where that comparable is today. So we're always taking into account declines, appreciation, anything that's going on with the market.
Okay. So let's go to this question. This question, guys, we don't really have one question because this can go into so many different areas when it comes to the art of determining the property values. Okay. So I want you guys to get a pen and paper out and listen very keenly. All right. From a appraiser standpoint, okay, what variables do you focus on when you initially get the appointment to go and appraise a property?
I mean, the first thing is always going to be location. You know, where's that property located? You know, is it next to a commercial? Is it next to a busy road? Is it next to something unique? That's going to be the first thing. The second thing is probably going to be the size of the property, right? We're talking about 1,000 square foot house, 3,005, all that. Then probably the next thing you're probably going to focus on is the age of the property. Is it a new construction? Is it 50 years old? Once you kind of have that as your framework, then you want to go in and look at the quality and condition of the property. It hasn't been updated recently. What's been updated? Has there been any defects with the property? Once you those are kind of just the basics, but once you kind of get all of those, then what you determine is where does that property fit in the marketplace.
So I'll be the investor. So he gave you the appraisal side, he's the investor side. What he just said, Doc, is so important to me because as I'm looking to acquire property, I am looking at location. What about the location? Okay, is there crime in the area? What is my competition in the area? Okay, am I buying a property that needs to be renovated? If so, how much renovation needs to be done to it? Okay, at the exact same time, okay, what type of renovation goods should I be putting into that property so that I can meet the competition? Okay, is this property overbuilt? Because there's a lot of times to where investors will actually acquire properties. It's the biggest property in the subdivision and it's overbuilt. Okay, that the price is going to look at that totally different. Would that be correct, Cliff?
Oh yeah. We don't. A lot of the ways that the realtors or a lot of even investors look at the value of a property, appraisals look completely different.
Totally different, guys. So yes, location is key. That's why I'm asking these questions so you, as an investor, can understand exactly how a appraiser is thinking, so you can then prescribe a right solution that fits what you want. Okay. Most of the time, we as investors are shooting blanks because we don't know what they're thinking. Now, Cliff, does every appraiser think the same?
No.
Okay.
There are some basic frameworks to that an appraiser has to be in compliance.
Yeah.
But at the end of the day, an appraisal is an opinion. So how they're coming to that opinion can come from a lot of different directions.
Yeah.
So it's going to be different from appraisal to appraisal. What you're hoping for is that what we're focused on in terms of the compliance we have to abide by is the same.
Yeah.
But at the end of the day, it's still an opinion.
The key word he said, guys, is opinion. Now, as a appraiser, do you welcome comparables being given to you, whether it be as is or ARV, from the investor?
Oh yeah. Any information that you can provide, I want to see it. Because we human too, so we may miss something, or we may not kind of see things differently. So if you can give me some information, I want to take that into account.
Okay. Now, if an investor does not agree with the value that the appraiser comes up with, whether it be as is or ARV, can they appeal?
Yeah, I mean, you can go back to your lender and say, hey, I think these comps are a little bit better. I think these ones are, more in line with my property. So you can take those steps. But what I see is a lot of times people come back and their comparables are just not even close to the property. They thinking everybody. I've never had somebody come back with saying your value was too high. So they always think it's more, and they always think their house is in better condition to the comparables than what it is. And you have to understand that too when you're looking at value is just because your home is in better condition does not necessarily mean it's a better home or worth more.
That's correct.
Because you could put a golden toilet in a house that does not raise the value of the house necessarily, right? Because in your area, people may not be paying that much more for a fully rehabbed home. You may be putting in an extra 20 grand, but you ain't getting that extra 20 grand out.
Makes sense. Do pools add any or tremendous value to a property?
Depends on the area. I've seen some areas where it adds a lot of value. I've seen some where it adds very little. I would say most of the time it does not add the value of the pool itself. So if you actually had to go out, let's just say it was the backyard, it was just basic, and you had to hire a company to put in the pool, most of the time the value you're getting from the pool is going to be less than the cost it is to put in the pool.
That makes sense. That actually makes total sense, guys. And guys, he's giving you guys a lot of jewels. Now, when you're looking at a couple last questions, Cliff, and then we'll be kind of done because he ain't gonna give you all of the secret sauce, guys. Go ahead, what happened? Um, when you are looking at an as-is property, and the investor who should be giving you his scope of work, how do you interpret an as-is property with a scope of work or the work that needs to be done to the property? How do you begin to appraise that process?
Well, if it's as is, then I'm not any work that's going to be getting done to it I'm not really focused on that because I'm looking at its current condition.
Sure.
So I'm not really taking that into account. I'm taking a look at what's already just been completed.
Gotcha. So let me reform my question then. If you are given an as-is value and an ARV value, hence the scope of work being given to you, does the scope of work, do you put a lot of weight on the scope of work that needs to be done to the property to determine the ARV value?
Yeah. I mean, I have to look at what you plan on doing to the property, so I need to understand the breakdown of all the materials you're going to be using, the vision that you have for the property, what you plan on doing, and then trying to see where those updates fit into the marketplace. So if you were to complete that, where would the house fit into the marketplace at that point? Most of the time on those, what I tend to find is people, they think money can go further. So they well, if I just paint and carpet, it should be worth $50,000 more. And they think they can fool the appraiser sometimes, thinking, well, I can do paint and carpet for $3,000. Like, no, you can't say you're doing all this stuff and say you're spending $3,000. I know what $3,000 can get you. So you can't do paint and carpet. You can do a couple of rooms, and that's how I'm evaluating.
Okay. How does your view change if there are very little comps in that subdivision? What do you normally do?
I mean, there's a lot of different stuff you can kind of look at, man. It's you got to really look at the marketplace at that point. I mean, because you really, it's hard to kind of play that in because every situation is going to be different when there's not a lot of comparables. Are you in a rural area? Are you in the city?
Yeah.
Are there not a lot of comparables because your home is unique? Are there not a lot of comparables because your home is new versus there's a lot of old properties? Like what's the dynamic?
Yeah. Okay. That makes some sense, guys. So, guys, I just wanted you to guys to get into the mentality of how an appraiser works, because number one, it's going to be blood in the water. In other words, it's going to be a lot of deals that are current now and coming in Q1, 2, and 3 of next year. So be ready. And it's important for you to understand how an appraiser may think. Now, I got to ask this question, because if I don't, Cliff, they probably take me to the woodshed. If you get three appraisals by three different appraisers, will the value come back the same?
No.
Now, why is that?
It's an opinion of value. This is how I always put it. If you got your wife, you got your girl, she got a diamond ring, right? Mm-hmm. If you went to 3 different pawn shops, would you get the same value at each pawn shop for that ring?
No.
Right. But it's the same ring.
Yeah, that's great. Opinion. Right. So is it a good practice in this market, to maybe want to look at, this is really kind of determine maybe an ARV value, as this value is pretty easy to kind of get. Is it wise to get more than one appraisal?
Yeah, I mean, the more opinions you get is going to help you get a better idea. So it's always going to help. You know, I would say if it's very difficult to find the value, like you're struggling with trying to find the ARV because it's very difficult, that probably means that your opinions on your ARV are going to be wide from your appraisers.
Yeah. So guys, I hope this helps you out when you go shopping for real estate transactions, because it's important to understand how an appraiser may think. Because once you understand how they actually think, you can properly begin to vet. Oh, one last question.
Yeah,
Whenever you're trying to determine value, how far do you go out away from the subject property? What's the radius?
That's another dynamic. You in the city, you in the rural area. I mean, you're always going to work, you know, closest out, right? That's going to weigh. Like, so if you have two properties that are very equal to each other, but one's closer, you're going to choose the one that's closer.
Yeah.
So, you know,
Makes sense.
It depends, you know. Really, once you get about, depending on the area, but once you get really about 2 to 3 miles away from the property, you're getting into a different almost market in many cities. So you obviously want to stay under a mile, but don't put so much on that it's a mile away, but a bad comp versus another house that's 1.3 miles away, but a good comp.
That makes sense. Guys. But guys, man, you got to peek into the mind of a licensed realtor. That is not at all normal at all. So I hope, guys, this blessed you. Hope you took some good notes as you're going out and shopping for those good deals. And there's some good deals out there as well. I would implore you guys to look at those right now, those mid-tier town areas. And I believe Q2, Q3 of next year, those major areas, those major metropolitan areas, you're going to begin to see a lot of blood in the water there, which will be good deals. And those that are ready, they'll be able to take advantage of it. So I think this is one of the biggest financial wealth shifts in human history right now. For those that are ready, they take advantage of it. So Cliff, you want to say anything, man, before we log off?
Nah, I think I agree. I think it's an opportunity to start buying, start marketing. We got a course teaching you how to do that.
Oh yeah.
Start putting everything out there to start looking. I said, even one house could change everything. So you just got to keep looking. The key to everything is finding great deals. So you got to figure out the strategy to do that.
And don't be surprised if you guys are perusing on social media and you see a video of Cliff and I marketing the course, because it's out. And so we are going to, of course, look at, I know from my side, scholarships, a couple people as well. I know Cliff has a desire to do that as well. We're making that determination now, and then we'll keep you guys posted. But thank you guys for your patience on that one. But just know that it's out. It's out. So, but guys, that's all I have for today, man. Cliff, man, I heard baby, we were a baby girl in the background hollering at you a little bit, man, saying what it do. To everybody in the crowd, man, tell we said what it do, baby. Now, before you leave, you know how you get that thing. And while you can, take that picture for your mama and them. Now, holla at your partners.
God give thanks. Whoa. Bless God, give thanks. Bless God, give thanks. Whoa. Bless God, give thanks. Whoa. Big God, big grace. Whoa.